Hello guys, I like to talk about semiconductor industry and particularly about Intel as a stock for future investments. So let's take a look about semiconductor industry. So from smartphones to electric cars, computer, industrial machines, as well as many global businesses using semiconductors. Even Philip Morris in IQOS using semiconductors in the new cigarettes. So 22.5% of the global GDP is made up by the global digital economy. So semiconductor and digital economy is huge, and it is expected to be growing. So from 4 trillion, 0.4 trillion to 1 trillion in the next 15 years. And semiconductor is the fourth most traded product. So the first one is the crude oil, motor vehicle parts, refined oils, and the fourth one is semiconductors, and using a lot of application from smartphones, personal computers, servers, robots, industrial application, consumer electronics, automotive, wired and wireless products. So currently or in today's world, semiconductors everywhere, and it's expected to spread further. So there is a global push for semiconductors, and we will use more and more semiconductors in the future. So from the top, it looks a good investment because there is a demand for semiconductors, and it means more semiconductors need to be produced by more companies maybe, or the larger companies will be more dominant in the industry. So what steps needed to be done to produce semiconductors? So you can start with the design phase. So the design companies like Qualcomm or Nvidia, they only deal with design, and they don't do the manufacturing. The manufacturing is done in foundries like Taiwan Semiconductor, or Intel has also foundry, and Samsung has big foundry, and of course there are smaller ones in all around the world. For example, in Europe, Infineon, it's the biggest one, which is also growing. So the stage 2 is the silicon wafer are processed, and the back end one is the packaging and the assembly of the parts, and the end product chips are integrated by EMS and OEM companies to create end product. So this is the stage 4, and stage 5 is the consumption. End products are shipped to companies. You can see the end products everywhere in the industry. And let's take a look on Intel. I could choose also Taiwan Semiconductor or Samsung, but I consider Intel interesting play, because in this global world we are moving to more local, and for the US, Intel is the biggest producer, and they try to bring the manufacturing to safer locations. So with war in Russia between Ukraine, we see a lot of risk, and this risk should be minimized. Also, if something happens in China, there is a great disruption. But with moving everything to US or Europe, safer places, there are more or less risk basically. So let's take a look on Intel. So the market demand is very strong, and it's growing for semiconductors. and there are constraints and also supply chain problems, because the world didn't expect that so many chips is needed after the pandemic, and I expect this will grow in the future. So what Intel is doing to meet the demand, announced new US fab site in Ohio, and also they have a leadership product, and it will drive the momentum. And also the Mobile is the autonomous driving company. They expect an IPO for Mobile in this year. So also, if you invest today in Intel, you also invest in autonomous driving technology, and most probably you will end up with Mobileye and Intel stock as well. So also they invest 33 billion euros around Europe. So one big project is in Germany, in Magdeburg. The other one is in Ireland. So they invest a lot of money to expand the production, and they will have scale. They have already scale. What is the risk with Intel? That Taiwan Semiconductor currently has a technology advantage, but this gap should be closed by Intel in the upcoming years. So let's take on the numbers. Take a look on the numbers. The number shows Intel is a good value pay. So this chart shows only the dividend yield. It's a mature company, so dividend yield tells interesting information about the company. It shows that the average yield is 1.9%, but the current yield is 3.11. Which means that above 3%, only 23% of the time we could observe the stock price. So it is an enticing opportunity in the current market. If it goes lower, it's even better investment in this company. So other facts about the company. So the current share price is a little bit below 50. So 5 years ago it was 36, and price per share is 2.4, which is not that high from my point of view. So it's a large value play, and it's semiconductor technology, and market cap is 190 billion US dollar. Just take a look on the other price per earnings. So based on price per earning, the company is around 10, which seems to be cheap in historical perspective. From price per cash flow, it also seems to be cheap from PEG ratio, so it's taking into consideration the growth as well. It seems not that cheap, but the growth trajectory of the company can change anytime. You can see the growing revenue in the last 10 years, and pretty sure with the new investment, new capacity, the revenue will grow in this company. So the gross margin is a little bit going down as Intel is losing its market leading position, but I believe it will change soon, because a lot of money from the government and from Intel is pouring in the semiconductor industry, and I think Intel will bounce back or even bounce forward. So the operating margin is also going down a little bit. and earning is increasing as the revenue is increasing. I can list some potential problems with the company, or say risk and rewards. I believe Intel can easily double in 5 years. It can come from the valuation, or the growth from the industry, or even from getting back to technology leadership in the semiconductor industry. Intel had a lot of times problems, a lot of time challenges, and as Andy Grew said, came this inflection point when Japan was much cheaper in memory production. But Intel could always change, and from the inflection point, they could basically bounce forward and became a better company. And I believe it might happen again. And it's a good prospect from the semiconductor. They are doing the investment also in mobility. This is the autonomous technology. So a lot of potential in Intel. But of course, there are certain risks. So cannot compete with TSMC, Taiwan Semiconductor Company, or other competitors. They can be better. So in South Korea and Samsung, or even some smaller players can become better. So maybe the investments in new project will fail. So we don't know whether mobile will materialize, or the growth expectation in semiconductor does not materialize, and there are political risk. And in case of Intel, we have less risk because they are focused the manufacturing footprints mainly in safe countries in Europe or America. So all in all, I consider Intel a good investment. So there is a lot of potential in the company, and I will add to my existing Intel position, and I think everything will work out well, and growth is there from the global perspective. So even if you are betting Intel or Taiwan Semiconductor, you you cannot go very wrong. Only in case if something unexpected, a global conflict happens, then it can ruin your investment. But in any product, there are certain risks. I think in case of Intel, there are more upside potential than downside. This is the basic principle of value investments when your risk is low. So you cannot go much lower, but your upside potential is pretty good. And I think with the push, with the global demand from semiconductors and new investment from Intel, and also the Mobileye technology in autonomous driving, and a lot of other investment in Intel, which makes a good opportunity to add some position in your Intel stock. I hope you enjoyed my video, and I wish you a great day. Thank you very much.